next up, we have a panel, an all-star panel, talking about the state of Bitcoin mining. So this panel is Dr. Adam Back, CEO of Blockstream, Juro Bulovic from Fidelity, and Jordan Chan, who you listened to earlier, from MicroBT. And the moderator is my friend Alexandra Moxin from Advanced Tech Media.
Welcome, everyone. Thanks for joining the panel today. So Samson's already introduced our panelists, and really I don't think any of them need any introduction. They're all well-known within the space. So before we dig into the questions, let's go into each person's background and company and how they're involved in mining. Dr. Adam Back, let's start with you.
So our involvement in mining, we've been at Blockstream doing a couple of different things in the mining space. So one is we've been prop mining, or in other words, mining on the company's behalf. And actually, I've been doing that in a smaller scale personally also. And then the other activity, which is over 50% at this point, is providing hosting. So specialized miner hosting for third parties, one of which is Fidelity. So that's one of our mining clients, and we have other ones which are not always named because some of them are private individuals and so forth.
Awesome. And then Jordan,
yes.
If you can give our audience a brief rundown of how you're involved in the mining space and what your company does.
Yes, as I introduced in my speech before, MicroBT only focuses on the BTC mining design. At the same time, we are trying to build up the partnership network to, we call it ecosystem, try to provide future customers for one-stop shop solutions together with our strategic partners like DCG, Blockstream, etc. Yeah.
Awesome. And then Juro.
Yeah, so I'll give a quick lay of the land of Fidelity. It's a large company. It's a well-diversified financial services company with many different business lines, and most people probably know Fidelity for its asset management business or maybe workplace services if you have a 401k with Fidelity. And then within Fidelity, I work for a department called Fidelity Center for Applied Technology. So it's Fidelity's R&D lab, and we have a mandate to research and explore new emerging technologies, so be it AI, VR, AR, quantum computing, and blockchain technologies is one of them. And so we research to see how these technology trends will affect Fidelity, our customers, and generally our industry. We develop proof of concepts, and try to spin up new products and services. Now, for the blockchain side of things, we formed a dedicated team in that department in 2013 to really explore this space and focus more on it. And one of the first things we started doing was to mine Bitcoin. Research was, as I mentioned, always our primary goal. Because we really wanted to understand how the protocol works, right? Bitcoin mining is the basis of Bitcoin. And so we wanted to understand, that pretty well first. And so we set up a small mining operation in one of our offices back in the day. We mined some Bitcoin. And then, from there, you have a question, how do you store it? How do you custody it? And pretty much all the other kind of products and services that Fidelity eventually launched in this space really came from Bitcoin mining.
So let's dig into the questions. Thanks very much for giving everyone an insight into your backgrounds. What are some of the ways that you ensure profitability in your operations? Are there particular financial instruments or strategies you incorporate into your mining operations?
So I guess that's back to me again. Well, one thing we did with our own mining is to hold it. We're long-term Bitcoin believers, and so we, paid our electricity bills and kept the Bitcoin. So some people look at metrics to try and figure out, how many coins miners are selling to pay the electricity bills as a kind of indicator of, how the miners are doing economically. But what we were doing was keeping the coins. And so I think that sort of indicates that some of this analysis may be wrong, at least in our case. And our other viewpoint, which we, put some time into modeling to validate afterwards, was that it's actually economically more favorable to keep the mined coins, at least for a longer period of time. I think, what our modeling indicates is that you get more economic benefit by holding the coins for a longer time period. If you are selling them as you go, you tend to get the commodity economics feeling or side effect, right? That, the hash rate catches up with the economic conditions, profit margin erodes, where if you keep them for longer term, you benefit from some evening out of the economic conditions. So something like the dollar cost averaging advantage and some other mining derivative benefits.
And I can jump in. Regarding profitability, I would say everyone who is running a mining operation understands this very well, and anyone who is thinking of doing mining should also understand it, is that profitability is a moving target, right? You cannot set your mining operation and completely forget about it. And really expect that it's going to be sustainably profitable over a very long period of time, right? Because mining is globally perfectly competitive industry, maybe unique in that sense. There's pretty much no barriers to entry. And so there is somewhere some Bitcoin mining entrepreneur somewhere in the world who is constantly figuring out how to optimize every single aspect of their Bitcoin mining operation. So once they figure out how to do that, and they will eventually, they deploy more hardware, they increase the hash rate, and they reduce effectively your profitability almost immediately. And so when I think about strategies, how to ensure profitability or tend to be more profitable, it is really all about vertical integration in the production chain of Bitcoin and achieving economies of scale. And so cheaper and cheaper electricity is one angle that most miners are pursuing. Getting close to that energy source. Often that means, cutting out middlemen wherever you can, or have really strong partnerships with your vendors and suppliers and middlemen to get that edge, right? Some people are focusing on hardware, so either bulk buying can increase profitability, or some are even venturing into maybe making their own chip. And so you basically have to find something that is not easily replicable by anyone else to give you an edge.
Oh. And then Jordan, do you have some comments on this?
Yes, Adam and Yuri already made a very comprehensive and great comments. I just add a couple of comments. Basically, for Bitcoin mining, besides the mining machine itself, the most important thing is to find cheap electricity resources, which is stable, and also stable. And this is the first. Second, just like Adam mentioned, he want to keep it, just mine it and pay the electricity bills. But for the miner itself, need to manage your fiat currency cash flows to allow you to have enough cash flow to pay electricity bills and pay the daily OPEX. And the third one, regarding after all this, can think of some sort of a leverage derivative combination of financial leasing or loan or other futures. It's a combination. Try to maximize your profitability. But BTC price, although it's becoming more and more correlated to macroeconomics, but still it's not so much forecastable. So sometimes you bet right, sometimes you bet wrong. So you should be cautious regarding your leverage ratios. Yeah.
Oh. And then what are some of the trends that you're seeing, either using or pushing the adoption of sustainable energy? And how can miners profit from these and stay ahead of the curve?
Yeah, so I think that public commentators have sometimes made comments about the amount of electricity that Bitcoin is using, but typically it's using renewable energy is popular because it's also low cost, because you don't have to source the raw material if you have a reusable energy source. So there's certainly a lot of hydroelectric and geothermal and other energy sources. I think it's a little bit harder to use kind of intermittent power sources, though there are some possibilities in that area as well. So things like wind and solar, where there is a duty cycle. So, for some parts of the mining life cycle between new equipment and equipment that's a year or so into its life cycle, different energy sources can work as well.
And I would just add, really, what's pushing the adoption of sustainable energy here is just the incentives of the Bitcoin system, right? As we said earlier, since miners are constantly looking for cheaper and cheaper energy, and renewable energy tends to be cheaper with some caveats, but they're naturally migrating to it, right? And I agree with Adam. Maybe wind and solar, while some miners anecdotally are using it, hydro, we believe, still is perhaps the most prevalent. But I also wanted to call out natural gas as a energy source that has a lot of potential in Bitcoin mining, because just generally kind of otherwise wasted energy and flared natural gas is what a lot of Bitcoin miners, at least in the United States, are pursuing these days. And for example, if you can find an oil producer who makes natural gas as a byproduct of their operation or of their oil drilling operation, and they're maybe today flaring it or venting it and really wasting it because it's not their primary business to monetize that, you could potentially get that gas for very, very cheap and perhaps even free if it's a scenario where you taking some liability off their hands. So a lot of miners in the US are also exploring natural gas as a source in addition to hydro and other renewables.
Yeah, Alex, I would also add the comments. The hydropower normally have the seasonal. It's like have a rainy season or dry seasons. So sometimes have, especially like in China, in dry seasons, there's no electricity. The electricity cost will be go higher up. And regarding like renewable energy, like wind, like solars, these are energies cannot be work on the independent base, supply base. They have to feed up to the power grid itself first, then power grid supply the power to the mining farm. So this is power grid will be leveraged the mean cost, etc. So probably we can think of the other way around, like because people normally criticize Bitcoin mining cost too much energies, etc. Actually, there's some creative ideas around the globe, especially in Europe. There's some teams are working on reuse the heat from the mining to supply the heat to households, especially in wintertime. And recently, there's another customer in Australia. They are working on the in winter provide heat, in the summertime they provide the air conditioning. So this is a terrific ideas. The system is under development, and if in the long run all the systems are becoming mature, it can provide very good solutions, and their customers basically can make the electricity bill up to negative. So this is a pretty promising. Yeah.
That's great. What are some of the ways that pools and operators can ensure their mining remains decentralized?
So I think this is a quite interesting topic, because with the sort of larger scale of operations, I mean, people mentioned on the panel already economy of scale, which tends to imply large scale. And so less decentralization. I think that there are some things about, the level of decentralization now is better than it has been at some points in history, for sure. But also there are some protocol approaches which can reduce centralization. So at Blockstream a few years ago, we started working on something at the time called OpenHash, which more recently got reworked under the name BetterHash and ultimately folded into the so-called Stratum v2 protocol. So for a few collaborations. So I think that's not generally live yet, but it's a protocol that's been proven to work, and it basically means that there's a form of artificial centralization today where if you use a mining pool, the mining pool chooses the transactions in the block, even though the miner can be running their own full node. And so what this protocol does is it allows the individual miner to choose the transactions that go in a block and still use the pool for variance reduction. So I think that can reduce quite a bit the level of centralization once it's more widely used.
I agree. And so I would add to that. So first on the pools, my thoughts are that yes, pools, there may be 5 to 10 pools that comprise a very large share of the network hash rate, but there's still a relatively low switching cost between the pools, right? These businesses have over time become commoditized. Now, pools are adding ancillary services to their product, right? So maybe a different software solution to manage your operation, or custom firmware, maybe trading derivatives. And so those products will make those relationships stickier over time. And this is maybe when I would start to worry about centralization. But also agree that things like BetterHash are trying to give more power to miners and take it away from pools and makes the whole system more decentralized. Now, on the operators side, I really, and regarding centralization of operators, I really see two different types of businesses, mining businesses going forward. One is Bitcoin miners first, and one is energy producers first, and they're fundamentally different. So Bitcoin miners first, those are those Bitcoin natives, entrepreneurs just looking for cheaper and cheaper electricity. And this is where we said economies of scale are at play, and they're just increasingly building larger and larger and larger mining campuses, and these are the natural forces that lead to centralization. On the other hand, energy producers first. These are energy producers who are seeing Bitcoin mining increasingly so as a tool to more effectively or efficiently monetize the energy they're already producing. So if you're producing, say, and selling natural gas, and prices of those products are trending down, you can convert it to electricity and mine Bitcoin. And as long as your fiat-denominated revenue by mining Bitcoin is larger than whatever revenue you would get from selling your energy on the market, you will do that, right? And so these types of operations, they're really up and coming, but they tend to be more decentralized, right? Because these companies and businesses are not building new energy infrastructure. They're really using existing one that they have and have developed for decades. And so these operations tend to be, spread across tens of thousands of maybe oil and gas fields around the country. And so this is a decentralization force that's also important.
Awesome. And then Jordan, did you want to comment?
Yeah, basically, we MicroBT was mined as an independent, we purely focus on design the better and better product for the industries. And we welcome the philosophy of decentralization, and we really appreciate the efforts, initiatives like conducted by Blockstream, by Adam's teams, trying to utilize BetHash or Stratum v2 these are all terrific efforts to ensure or try to make it better, the decentralization of the global network. Yeah.
Awesome. And then last question. What are some of the current security risks to Bitcoin mining, be it hardware, software, or other risks, and how can operations stay ahead of these?
So I think it's, there are some sort of economic risks. I think there may be some policy risks. So it's important that mining is decentralized and anonymous so that there are no attempts to reduce the fungibility that, so mining is providing this kind of fungibility or de facto privacy property in a way that Bitcoin has. So it's important for Bitcoin's value that remains. And so I think, we should be careful to not have, taint issues and things like that coming into mining. So I think the better hash line of protocols helps because there are a lot more miners than pools. I think if you look at starting a pool, and Blockstream is also in the pool space now, the challenge that arises, so it was mentioned there that there are, maybe 20 or so pools. And if you do the numbers, it appears that statistically you need, like maybe 5% of hash rate or something to start a pool and have a reasonably low variance. And if you don't have a good variance, you won't provide a good service because that's basically what people are paying the pool for. So there's some kind of limitation in the decentralization of pools. But I think BetterHash can improve that basically because you can support many thousands of individual miners with their own transaction selection and more distributed processing in different parts of the world. So I think that's a good development.
I agree with all of that, and I would maybe add an aspect of physical security. So obviously, if you're running a large-scale mining operation with millions of dollars of equipment in it, you want to make sure that it's properly secure. And so the hosting facilities that we work with, they know very well how seriously Fidelity takes security. So we have a physical security team that goes out and they're going to assess the entire security of your building, the surroundings, technology systems, protocols, processes, and that team does it for any Fidelity business, right? And we're just a Fidelity mining team. We're just lucky that we can leverage those Fidelity capabilities. And we do that to protect, obviously, our equipment that's inside the hosting facility that we use. But we often joke that it's also a free consulting service for those hosting facilities. Because it's likely that some of these companies, maybe for the first time, are had to deal with a large institution with such a high standards, such as Fidelity. So we, in addition to all the cybersecurity and other stuff, physical security is also very important.
Agreed.
When the company trying to invest in mega projects, it's better to also spread around. Of course, like the place in North America, especially US, the political or policy environment is relative regulation environment is relatively stable, which is maybe the project can be become bigger. But in China, the different provincial government may have different policies and also varies from time to time. So the miners over there in China tend to decentralize, spread around the mining farm. Don't make the one location much bigger. They spread around. This is the first. Second, recently we also saw a lot of emerging new users from some countries which like Venezuela or Argentina or the other Middle Asia countries. Those countries are right now in a little bit mess in the financial markets, and the currencies, fiat currency are depreciation pretty much, and the rich people and companies in those countries are trying to deleverage the inflation. So all these are new commerce, and they could be also the one of the factors add up to the power of decentralization.
Awesome. All right. Thanks everyone for joining the panel. I think we're wrapping. I appreciate your time.
Thank you.
Thank you.